Hello, everyone. Welcome to today's webinar hosted by the University of Nicosia and the Institute for the Future. We'll be talking about the next 10 years in cryptocurrencies and blockchain. My name is David, and I will be your host today. And with me here, we have three distinguished guests that I'm going to introduce you now. The first one is Professor George Giaglis, who is a director at the Institute for the Future at the University of Nicosia. He's also a leading expert in the area of blockchain applications. He's been advisor to multiple blockchain projects and technology startups. And he's also one of the first scholars and academics in this space. So Professor Giaglis, welcome. And we have a second guest who is Tomasz Kulik, who is a CTO of Vacuum Labs, which is a software house focused on development of applications and software in the realm of the fintech and crypto. So welcome, Tomasz, too.
Hi, thanks for having me.
And the third guest we have today here is Maciej Galvanek, who is a crypto investor. And he's an investment manager at the Siegel Fund, which is a cryptocurrency fund based in Gibraltar. And apart from that, welcome, Maciej. Yeah, I would just say that apart from that, Maciej also founded some other projects, for example, CryptKit, which is a portfolio management tool for crypto assets. And he's also working on some other projects, which we might get to later on during the discussion. But before we start with the discussion, let me just tell you a little bit about the University of Nicosia and some of the educational offerings that the university currently offers. So I believe you should see the slides at the moment. And cool, yeah. So as many of you may know, University of Nicosia is one of the, and according to some sources, the top university when it comes to the blockchain education, according to multiple resources. And I just want to briefly tell you a little bit about some of the programs that the university currently offers. So first and foremost, it's the Master of Science in Digital Currency, which is the world's first master degree focusing on this topic. So it's a full-fledged master program that takes you approximately 18 months to finish. For those of you who don't want to spend so much time on educating yourself in this space, you can try to educate yourself through some other programs, such as blockchain academic certification programs that takes a couple of months. And then there is also option to take a blockchain professional certification courses, which are focused on multiple topics, such as blockchain law, regulation, policy, then security token strategy, and then also applied forecasting. And then the last one is a masterclass designed for professionals and regulators in the space, which is a blockchain regulatory academy, which is just a masterclass that lasts a couple of hours. So it's very convenient. To tell a little bit about the Master of Science program, which probably many people are interested in, as I said, it was the world's first master program focused on this topic. It takes 18 months. So far, it has been taken by a couple of hundreds of students across the world. It can be completely done remotely. So it's pretty much apocalypse-friendly master program and designed that way from scratch. Which is really cool is that there is also MOOC, which is Massive Online Open Course that you may have already heard of. It's been one of the most successful and most popular educational courses on this topic in the world. It has been taken by 45,000 students so far. And it's also one of the first course that belongs under the Master of Science program. So if you take it, you can do so for free. And then you can, if you want to, you can go on with the master program. So I'm alumni from this program myself, so I can definitely recommend it to you. It's been a really great pleasure to do all these things that are involved here. And here you can see a little bit more about the program structure. There are really many interesting courses led by the top experts in the field. You may have heard of, for example, Andreas Antonopoulos, who is teaching the MOOC I mentioned on the previous slide. So it's really a lot of interesting things there. And what's the best thing about it is that for those of you who want to apply and start to educate themselves in this space and maybe thinking about switching your business career to this space, you can start actually pretty much soon from February, when it's the deadline for the spring semester. Otherwise, you can also start from September for the autumn semester. Here you can see the admission criteria, and there are also a bunch of discounts and scholarships available. And the university, of course, also encourages students to pay with Bitcoin. And I think it was also the first university in the world that started to accept Bitcoin for tuition fees, which is also very cool. So if you are interested in these things, please scan this slide, this QR code, and you will be redirected to contact Hazel, who is an enrollment manager, and who will be able to provide you with all the other information and to help you a little bit navigate through all this information. Okay, so I think we can start with the discussion. We have many people attending this webinar, so you can, all of you, ask questions as we speak. We already received lots of questions, and we will do our best to answer as many questions as possible. So to kickstart the discussion, I want to ask our guests. So we have, all of our guests have a different perspective and different backgrounds. We have an academic, an investor, and a software developer, an engineer. And I want to ask you if there was some trend or event in the so far cryptocurrency history that you didn't expect to happen, that surprised you and you didn't see it coming. So I don't know who wants to take up this question first. Guys.
Maybe I will. Yeah, I can, if you can hear me. So for me, like every day is surprising, actually. Like especially in last half a year or so, with the so-called DeFi summer. So many things happened, good or bad, that I'm constantly surprised by something. Some specific trend that I didn't foresee will be so big of a topic. Are algorithmic stablecoins, which are basically projects built right now on top of Ethereum that try to achieve a dollar peg without holding any reserve assets or any like dollars in the actual banks. They are trying to do it algorithmically via some economic incentives and mechanisms and economic actors that want to maximize their profit. I think that it's still super like early, and what we see now are mostly like Ponzi-like games and casinos more than anything else. But it definitely, I think there is something interesting there that can grow much bigger than we can imagine. But we just, I mean, there is like still a lot of room for research and improvement. But this is something I didn't foresee, because I thought that either we will have like this commodity like cryptocurrency such as Bitcoin or Ether with like restricted supply, or we will have like dollar-pegged centralized stablecoins or over-collateralized stablecoins. And I didn't see this particular thing to be such a big trend in such a short time span as it is now. So things like Ampliford or empty set dollar, Frax, which is fractional reserve stablecoin, but it's also in this category for me.
Thank you. Professor Gaglis, for example.
Yeah, first of all, hi everyone. It's great to be here, and David, thanks for organizing this, and thank you to the hundreds of people that are with us. It's fantastic to see also in the chat so many messages and so many people from all over the world. Well, as I second what Matej said, this is a field full of surprises, so I wouldn't know where to start. I think, I mean, I'm in this space since 2012. So I've seen, you know, some of the early days in the space where things have were really Wild West compared to what we see today. And I think the constant surprise for me has always been the speed and the magnitude at which things were happening. So you were seeing Bitcoin, you know, trading at $10 and being really something that was in the realm of, you know, geeky nerds and crypto anarchists and libertarians. And suddenly in one year's time, it had gone up 100x, and it was now, you know, in the realm of business people and bankers starting discussing it, even if not always endorsing it. I would never forget the first consensus conference that I attended, which was full of people, you know, wearing their hoodies and discussing, you know, the next level of crypto anarchism. And then a short 1 year later, the same conference, it was full of people with their suits and ties, going around from, you know, Accenture and other big firms, discussing how blockchain might change our world. And I think this is something that people do not always appreciate. Many people are saying, oh, Bitcoin is now $35,000, it's too late for me to enter. I don't know, and I cannot provide investment advice. I think probably Matej would be in a much better position to talk about this. But in terms of how the technology is disrupting our world, we are still very early. We haven't seen anything. As we will be discussing later on, I think the real disruption as felt by the majority of the population is just starting. So more surprises to come.
Okay, Tomasz, what's your view?
Yeah, many surprises here. I'm surprised. I'm a little bit surprised that Bitcoin is still here, because with, if you remember, end of 2017, beginning of 2018, Bitcoin wasn't very popular then, and it was still the most popular crypto, of course, but it was slowly losing its dominance. And you know, the protocol has many disadvantages to other newer altcoins. So I was somehow expecting it'll slowly go away and will be replaced by something else. And the trend then changed, and now it's also gaining popularity and gaining market dominance. So this is one surprising thing for me. Another surprising thing for me is that how impotent states are in regulating this business, because I was thinking that like 4 years ago, I was expecting some strong regulation which will simply destroy this whole space, and it didn't happen. And also, I was quite surprised how long it took DeFi to emerge, because when Ethereum came, like 2015, we were like, or at least all geeks were like, oh, this is Turing complete language. You can write smart contracts in it. You can create, replicate products as Wall Street has it, options, stocks, everything. And then like 4 or 5 years passed, and only this year finally there was some proper DeFi movement. So I don't understand what was happening during all these years, but yeah, it took a bit more time than I anticipated originally.
Okay, so I think we can follow up on this with another question. So each of you have a different experience, and you've been active in a different, in the same space, but from different perspectives. So I wonder, what were the biggest challenges for you? For example, Tomasz, so we can start now with you, like from the software development point of view, because what I like also about this discussion, that we don't have only Bitcoiners and Ethereans here, but for example, you and Vacuum Labs are active in the Cardano ecosystem a lot. Mm-hmm. And Matej is also active and building some stuff on Polkadot substrate tech stack. So I wonder like what were your biggest challenges from from an engineer point of view when developing stuff on crypto?
Yeah, that's a good question. One big pain we are constantly facing is the lack of any planning. I mean, the whole crypto scene is very agile. Yeah. So when we are doing some Cardano stuff, a lot of specifications are created as we go. We literally never knows what we are building until we did it, and it somehow works. It's really hard it's really problematic to plan something in advance, and I don't blame anyone for that. It's simply very agile space, and anyone who is entering the stuff.
Okay.
For example, you mentioned Polkadot. I read some specifications and papers from them, but they still don't know many answers to the questions, like how they are going to do scaling properly. I know they have some high-level idea, but the details are all fuzzy right now.
Okay, so I think Maciej could follow up on this and his view, maybe also being first, maybe you can address the Polkadot challenges, and maybe then also like your challenges as an investor in the space.
Yeah, so I mean, I'm not like I'm not a developer, but I am right now in Tenerife with on a retreat with a couple of guys who are developing on Substrate, and I don't agree that there is an like issue with scalability. On the contrary, scalability is one thing that Polkadot serves very nicely with ability to create your own parachain. I mean, it's like application specific blockchain where you can optimize a lot of stuff for your own app specific use case. It's similar to sharding actually, and yeah, Polkadot is not working as designed right now, but it is going there quite quickly. And I would say that yeah, scaling is one thing that you can do quite easily if you just don't try to build everything on one singular blockchain, but if you kind of make some ecosystem of interoperable blockchains, and each of them can be optimized for their own special use case that they are like focusing on. I can talk about this vision of like this app-specific multi-chain future in some other question. My challenge with investing in cryptocurrencies was mostly around tracking everything under one roof. Like there are so many things, especially for like investment fund like ours, where we invest in a lot of stuff. We run staking nodes. We use many DeFi protocols. We farm yield with stable coins. We invest in tokens. And there are like so many data sources you need to kind of track correctly as an investment fund to be able to do your bookkeeping properly. That it was pain in the ass for us to do it with Excel sheets or even with some professional tools that we saw on the market. So we basically had to create our own tool for that. It's called CryptKit, as David mentioned earlier. And yeah, it was actually, it sounds weird, but it was one of our biggest challenge. And the other one is, of course, explaining our vision of this opportunity to the investors who may not be so familiar with this technology. And that was kind of, especially during the bear market, right, when everything is like going down, prices are suppressed, and media are calling the death of cryptocurrencies and Bitcoin and everything. It was kind of hard to explain to our investors this is the best time to actually invest. Right now, when everything is booming again, like everybody is knocking on our door again, and we need to turn people off because we don't want them to kind of overextend during the all-time high. So it's kind of, yeah, the cyclicality of this market, you know, it makes, I don't think there was any other market in the history which was as sharply cyclical and prone to repeated bubbles as, let's say, Bitcoin. When you look at chart of Bitcoin, you go back to 2011, you see this first like little bubble from like, I don't know, $1 to $20 or something, then it goes back down minus 80%, and then you know, the next year you see another bubble which goes order of magnitude higher, and we had like five of these bubbles already. Each of them was like order of magnitude bigger than the last one, and people are actually, you know, we are still like monkeys with brains that aren't like well suited to deal with such exponential growth, and then recession in such quick order. Even people who are used to invest in stock markets, you know, you have maybe one cycle every 10 years, and then you go to crypto and you see like much bigger cycles in much quick order. And yeah, it messes with people's psychology, so they try to trade a lot, or they try to, I don't know, you know, buy the top and then sell the. I mean, they want to do the opposite, but what ends up happening quite often is people, you know, are eager to invest when prices go up, and then, you know, when they go down, they try to sell because they are afraid again, and they don't have conviction to hold through these bear markets. So talking with our investors and kind of making them see the long-term opportunity and the long-term perspective, so they are not afraid of these moves, and to kind of bear with us during the hard times, and maybe invest when the times are tough, and then maybe take some profits when times are good. It was the biggest challenge from like a human perspective for us.
Thanks, Maciej. I can see lots of people in the audience agree with you. Okay, Professor Gaglis, what was your biggest challenge when it comes to educating in this space?
Well, educating. Okay, the biggest challenge, two types of challenges I can think of. One is an internal challenge for us, because this is a very, very fast moving space. So in order to keep up with it and refresh the material and be always on the forefront of development, it has always been a challenge. When we were designing the curriculum for the first masters back in 2013, we really had to design from a clean slate. There was nothing, no other educational offering in the world. So I think we paved new ground for others when designing the program. But the ongoing challenge, the most important ongoing challenge for our students, is how to help them develop the mentality and the mindset of thinking in tomorrow's terms, not in today's terms, because the information that you get today is going to be obsolete in near zero time. So when Bitcoin was dominant, we were trying to make people think what would be beyond digital money. Then when Ethereum and the decentralized web and the decentralized apps came about, our challenge was to go a step beyond and make people think what would be beyond decentralized apps. Now that we are in an era of CBDCs and decentralized finance, our challenge also as researchers, not only as educators, is to think again, what would be the next tidal wave in this space? What would lies beyond decentralized finance? What will people be discussing 2 years from now when DeFi will be, you know, just another application of crypto? And this is an ongoing challenge. I think this is what makes our job worth it. And it's really fascinating interacting with our students, because we have people from all over the world. Our master's is an online degree, so as David, you know, the class consists of people from every continent, and they bring different perspectives. And this is a hugely rewarding experience, not only for our students, but also for us. We get to learn a lot from our students and from each other, because each one is bringing different perspectives. So it's a great area to be in. And I think, as some of the people in the comments are saying, it's still early days to get into this space.
Okay, thank you. We are receiving lots of questions from people. We have now over 450 people watching currently at the moment, and we will get to all those questions soon. But just to still a little bit evaluate the past before we jump into the future, how are you satisfied with the adoption of crypto maybe as what was the initial use case for crypto? Well, we thought this is the initial use case for cryptocurrencies, like as a means of payment or payment methods. How are you satisfied with adoption? Who wants to start? Tomasz, you are, okay, Professor.
Yeah, people have different perspectives and have historically had different perspectives and thoughts and opinions on what adoption means. So admittedly, Bitcoin is not the best payment instrument that we've had. I mean, for a digital payment means, it's much clunkier and slower and non-scalable and less flexible than many competitors. But it organically emerged as the digital gold, so the store of value for the future and a kind of hedge against the inflationary pressures of fiat currencies around the world due to the constant, quantitative easing and pumping of the balance sheets of central banks around the world. So it's, for me, I would say that I'm very, 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 very satisfied with adoption so far. If you had asked me back in 2013 or 2015, or maybe even 2017, I would never imagine that 2-3 years down the line, by 2021, we would be seriously discussing the possibility of a blockchain-based euro or dollar or yuan or another, central bank digital currency. So the technology is becoming mainstream. Bitcoin is becoming mainstream. We are seeing big institutions coming in, transferring parts of their balance sheets in Bitcoin. We're seeing institutional investors coming into the space, and I think we couldn't realistically have hoped for a better adoption up to now. And in innovation theory, we have a saying that goes slowly then suddenly, and this is, I think, the case with Bitcoin. It has taken years, but it's the accelerating pace of adoption is breathtaking, really. So I'm really happy with how things have gone up to now.
Okay, guys, Tomasz.
Yeah, maybe I completely agree with what Professor just said. I'll just add that, yes, I mean, many people, when talking about adoption, they're thinking like adoption means paying for your coffee in Bitcoin or stuff like that. But that's only part of adoption. That's payments and payments of small amount of money. There are many other ways in which the crypto can be adopted, and one is the storage of value, which currently obviously people uses Bitcoin and crypto in general for such means, because the global capitalization of the market is booming, right? So this is one kind of adoption we are seeing right now. Then also DeFi scene, still very young, but seems promising. I think it'll also be a space we'll see a great adoption in next years. But I don't expect us paying for coffee with crypto anytime soon. But that doesn't mean there is no adoption, or adoption is slow.
Okay, Maciej?
Yeah, well, I would maybe, I would divide Bitcoin and everything else. So for Bitcoin, when you have this like bell curve of adoption, like when you have like tech enthusiasts and innovators in the first like couple of percent of people, then you have visionaries, early adopters, then you go to the majority of like pragmatists, and you have like the conservative adopters, like your dads, and then you have like skeptics and the laggards who are coming last, your grandmas and stuff. So when we look at stuff like Facebook, like just recently, my grandma from the village, she was telling me how she's joining Facebook, and she learned how to post some pictures there to share with her family and friends. So even for something so mainstream as Facebook, the adoption curve can get pretty long. When we take a look at Bitcoin, we see now, I mean, grandmas obviously don't hold it. Maybe even like, some people who are maybe like gold bugs. They don't trust governments. They want to save their money in something like non-governmental. Maybe they are actually coming to terms with Bitcoin. We see some big bank CEOs like right now shilling Bitcoin to mass media. So this is actually something, I believe Bitcoin is something that across the chasm between early adopters and early majority. And these big bank CEOs are not like ideologically aligned with cypherpunk movement or crypto anarchists, right? They are pragmatists. They want to make money, and they will probably, or they already figured out ways how to make money out of Bitcoin via custody services and stuff like that. So I would say Bitcoin is already crossing this like chasm. For everything else, for DeFi, for smart contracts, for alternative blockchains with various other use cases, and I think it's still safe to say we are super early, like in maybe tech enthusiast / visionary stage. There are obviously a lot of actors who are profit driven, like DeFi is a one huge, I'm not going to say casino because there is definitely some positive, some development going on there, but there are a lot of games that you can play and win a lot of money out of other people. There are yields that you can just like lend stable coins there and earn double-digit yields, which is not something that your bank can offer. So there are definitely some pragmatists or early adopters there who are not just ideologically driven or like enthusiasts about the technology. When we like compare, I don't know, crypto market cap with anything else, it's like it recently just hit $1 trillion, which is like quite sizable as an asset class. It's still like, it's not something to write home about. It's still pretty small, especially when you realize that market cap of $1 trillion doesn't mean that someone just took $1 trillion and put it there. It just, it's just the prices of cryptocurrencies are higher, and when you multiply them by their supply, you will arrive at this number. But there are definitely like tens of billions of dollars coming into crypto to speculate on it or to save money there for the long term, to kind of beat the inflation and stuff like that. So from the like investors or capital perspective, the adoption is going quite well. When we take a look at metrics which some technology startups are looking at when they try to figure out how far are they on their adoption curve, I think it's still quite low. Like 100 million users is something that's actually quite sizable for for a technology startup in Silicon Valley or like globally. However, I don't see many crypto applications or crypto companies to have hundreds of millions of users, maybe apart some exchanges or something like that. So I think we have, and exchanges are still like centralized companies that just allow you to speculate easily on crypto, but you are not really user of cryptocurrencies. You are just speculator, and the exchange is holding all the cryptocurrencies. So I think from this perspective, like every big VC investor from Silicon Valley who is used to investing in traditional technology startups would tell you that the adoption is still not quite there. However, that just means that the upside is still kind of big when you think about it. Like 7 billion people on the planet, and we are not even like at 1 billion adoption at this moment.
Yeah, so we kind of agreed that there are some flaws in Bitcoin, which doesn't make it probably the best payment system. But I wonder, what is your opinion? So what is really the future of Bitcoin when it comes to Bitcoin as an asset, and also then as a Bitcoin as a technology? Do you think it will really reach the point when it will be a global reserve asset? And second part of the question, do you think its blockchain will be used for some other meaningful use cases? What do you think?
Well, from a technology standpoint, Bitcoin is admittedly very limited. So Satoshi's original, paper was, a breakthrough back in 2008 when it was published. It's certainly not a breakthrough anymore. Having said that, I think that Bitcoin, the whole cryptocurrency space, is characterized by very heavy first mover advantages. So Bitcoin has rightfully gained a place that I think it will never lose unless some hugely unforeseeable things happens, like, I don't know, hacking into SHA-256 or something. So Bitcoin is a reserve currency already. It's digital gold. It's global. It's being adopted by institutions. So I think it has already found its spot. There is going to be, I think, huge competition in the coming years between alternative uses. So which is going to be the decentralized digital payments means of the future, which will be the platform on which most decentralized applications will run. And I think Ethereum is a huge contender for that space. One prediction that I would like to make, and maybe it will not make many people happy in the audience, is that these verticals, these segments of the market, do not have space for many players in each segment. We are still in the internet economy, decentralized or not, it's still the same dynamics. So there's huge network effects, and there's huge winner takes it all dynamics. So if Bitcoin is going to be the digital gold of the future, that's it. There's not going to be a second digital gold. If Ethereum is going to be the platform for smart contracts and token issuance, that's pretty much it. There's going to be a monopoly in that space. There are going to be other opportunities, like layer 2 solutions for Bitcoin, or allowing smart contracts implementation on top of Bitcoin, or maybe privacy and anonymity oriented currencies. Obviously, decentralized exchanges, platforms for tokenizing different sorts of assets, and so on and so forth. But again, in each of these verticals, I think we're going to see one winner or two. So we're going to see monopolies or duopolies emerging. So we are still in early days, in the sense that we are seeing, I don't know, last I checked at CoinMarketCap, they have listed something like 9,000 different things. This is not sustainable in the long run. So we might, end up having, I don't know, 100 meaningful projects a few years down the line, but we're gonna see a consolidation as the market matures, as we've seen in the internet economy time and again. That's my thesis.
Yeah, I think we already seen this consolidation in the crypto markets in the last years a lot as well. But yeah, what about you guys? What about the future of Bitcoin as an asset versus as a technology?
Yeah, as for me, I don't like Bitcoin's tech very much. The first reason I don't like it is the scaling, and the chain itself has a very limited throughput, and I don't think that Lightning Network will be it, but I can be mistaken, of course, but I'm pretty skeptical about Lightning so far. So it has very, very limited throughput. And there's another aspect which I dislike even more, and that's the security. I don't know if you are familiar with what 551% attack is. It basically means that an attacker seizes a huge amount of hash rate hardware, and they will create like separate blockchain reverting transactions on Bitcoin. Yeah, and currently such 51% attacks were played against smaller currencies, such as I think Bitcoin Gold it was, and several others. But the big boys like Bitcoin, currently they are no under any imminent threat. But if you do some simple math, like buying hardware to play 51% attack on Bitcoin cost just $4 billion. It's not small money for me. I don't have it, but many people and many companies and many nations they have. I mean, I'm from Slovakia. We are a very small nation, but still we could afford to pay this money like several times in a year from budget of our governments, and And if we can destroy Bitcoin this way, then anyone can. Yeah. Think what Elon Musk could do if he decides one day that he doesn't like Bitcoin because he's the man of Dogecoin, as we all know. Yeah. So he could build his mining farm and destroy the stuff completely. And currently, no one really cares if Putin or anyone wants to destroy Bitcoin. It's still easier to do it via regulation than via hardcore attack as such. But I think it's rather a question of when rather than if at all this will happen. And of course, this $4 billion is the current price of 51% attack. And of course, you can like, these are just some number of money you would need to spend to get the hardware. Then you need to build a farm and buy the electricity, and the bill is going to be much higher. But that's not the point here. Yeah? The point is that the number is already pretty low. Even if you had to pay 10x, it's still a low number for me. It's negligible in comparison with Bitcoin's capitalization. And with the next halvings in, I don't know, 3 years or so, this number will be even decreased. So I don't really think that Bitcoin can survive this long term. I was pretty skeptic about Bitcoin in 2017, and I'm still pretty skeptic now. So,
okay, I think I would follow up on this with some of the questions that also come from the audience. And a lot of people, and you already brought it up, and lots of people ask about the possible repercussions from the regulators on crypto space. We've seen recently that FinCEN in the US has proposed some interesting rules and regulations that are not in effect yet, but might be in the future. We also seen a couple of weeks ago that some of the first mining pools that they kind of enacted rules that they KYC the miners themselves, Bitcoin miners. And so this is something that this kind of suggests that we are going towards not such a nice direction when it comes to Bitcoin. So what are your thoughts on this? Like Matej, you can start now. Like this clash between the old system and the crypto system, and how it's going to play out, whether it's like Bitcoin itself or maybe crypto in general.
Well, I wish my colleague was here because he likes to speak about regulations and these kind of topics much more than I do. I find it like very boring. There is so many things happening in the space, like on the innovation front, and all we talk about, I feel, is just how to regulate it and how to like stamp it down and how to put governments in charge again. I would say that yeah, definitely some regulations will happen as the space grows and matures, and some actors will demand it. Like big investors who put a lot of money into it will demand that it's regulated for them to be safe. I believe that whatever regulations will do with the space, life will find a way. There will still be some things, some dark or gray areas that will kind of do its own thing, whether it's regulated or not. I think that we can see, or we will see, some sort of a divide within the crypto ecosystem, the same way or like analogous to what happens on the internet. Like there is one part of the internet which is like mainstream and it's captured by a couple of big front ends such as Google, Facebook, Twitter, and most of people interact with these front ends. And then there is this huge dark web and deep web of information and places which are like harder to get to, but they offer all kinds of things for all the people who want something else from this tech than just what couple of big tech corporations will offer them. So I think something similar can actually happen, and there are like, for me, there are like two ways how it can happen. First, we are seeing much more regulatory-centric approach to innovation in the US versus the rest of the world. Like US, especially like SEC, is very tight around these regulations, around securities. IRS is very tight about taxes and controlling flows of finance, for US citizens at least. It's very hard to innovate there on money front. Whereas in the past, when internet was born and there were like a lot of startups born in Silicon Valley, they all dealt with like social media and e-commerce, which was much less regulatory sensitive, so they could grow easily in US. But I feel like crypto will have much harder time there, and all the projects that are building there will need to somehow deal with it. And then we see rest of the world, especially like Asia and like maybe even like Russia, maybe some parts of Europe where crypto is more of a, let's say, gray area. They are less regulated. Maybe some like governments have much more friendly approach to cryptocurrency, so they give it a slack for the time being. And I think we can see a lot of more. I mean, I as an investor, I see much more exciting innovation and investment opportunities right now from the non-US projects than I see from US projects. Even if the projects themselves are innovative and cool, they kind of need to produce some sort of a token that doesn't do much, because otherwise it would be deemed security, and then they make it uninvestable. So you can't really expect to participate on the value capture of the project. And then there is this other divide that can happen, which is not geographic, but it's more like, it will be, the line will be the regulation itself, where we can see AML, KYC, friendly projects, like all these boring words, that regulators love. And then we will see this deep or dark crypto, like, or offshore crypto, let's say, that will foster the rest of the innovation. And yeah, I mean, for mass user, it will be probably harder to get to use these services, but they will be there, and I believe there will be ways how to get there. So yeah, there will be a divide probably. I also believe, I mean, this is like a bit of a like outlier view, but I also believe that some of the crypto networks which will emerge and form will be akin to a small digital voluntaristic nation states with their own like consensus rules, with their own governance, with their own quote unquote taxation. I mean, I don't mean like literal taxation where like you are forced to pay taxes, but there will be fees that will be directed to financing of public goods. We see some glimpses of it on Ethereum, where like big Ethereum projects, like DeFi projects, they are donating a lot of their profits into Gitcoin grants, which means that there is this like autonomous organization that decides where the money are coming to, how are they used, and they are mostly used to advance the space and for non-profit use cases such as research and building of infrastructure and stuff like that. So I'm excited about this part of the innovation. And I mean, I know that regulation is kind of necessary, and it will happen one way or the other, but I'm not the one who is too excited to talk about it too much, and I let others figure it out.
Anyone want to add to this? Okay.
Well, maybe just, sorry.
Yeah.
I don't think that it's that simple to regulate crypto. I think the states will try, but they will fail. They will do some something that looks nicely for average citizen, so they can tick the boxes like, yes, we are doing something in this space, but not regulating the users really. But I'm not necessarily sure this is a good thing. I believe that crypto, I mean, generally people in crypto space don't like the regulation, because it's like harming their business, and I completely understand that if there was some regulation, the prices will fall immediately. But if you think about what kind of crazy applications you can build with crypto, I mean, you can literally like order a murder via some smart contract decentralized app. If you really think about that, you can order a murder of politician. That's crazy stuff. You can do some ransom scheming stuff. I mean, crazy stuff. You could probably fill a season of Black Mirror with such ideas. All of these are pretty realistic. There is no problem why such a thing couldn't be created. It's just a matter of time when sometimes someone creates this, and when they will, it won't be necessarily good for the society. So I don't think the regulation will be there really, but I'm not sure whether I should be that happy. Even though financially I'll probably do good as a crypto holder if there was no regulation.
Okay, Professor.
Okay, yeah. On the subject of regulation, and sorry if I repeat things that were said before by Matej and Thomas, but I have to admit I wasn't paying 100% attention because I was answering some of the questions in the Q&A, because there are some amazing questions there, and I don't think we will realistically have time to discuss them. So I was replying to a few people. So in terms of regulation, in bullet points. Bullet point number one, regulation is good. Anyone that says that they don't welcome regulation in the space, in any space, they're being naive. It's the early libertarian dream that we will operate outside the margins of society. And if this was the case, Bitcoin would still be, valued at a few cents. The more regularity, clarity we get in the space, the more money we'll get in. Institutional money and big investors and pension funds and you name it will never touch anything that doesn't have regulatory clarity. And therefore, it's not a coincidence that the more regulatory interventions are being made, the more new money flows into the space and the more prices appreciate. So that's bullet number one. Bullet number two, regulation is always about, in a decent society and developed society, regulation is about protecting the little guy. It's about protecting the investor from scammers and fraudsters, and everyone in the space knows we've had more than our fair share of scams and frauds in this space, especially given how inherently complex it is for people that are not familiar with the mechanics and the technology. So regulation is good for the small guy and not for the big institutions as well. Now, having said that 2 points, the other part of the other side of the coin is that regulation is extremely challenging in this space, because the space is moving very fast. Regulators are always behind, and they are always behind big time. I was studying the MiCA regulation that has been proposed in the European Union now. The European Commission has put forward a proposal for what they call markets in crypto assets regulation. And it is really difficult, if possible at all, to enforce if this goes forward as it is. And even in the definitional side, the definitions are so broad and generic and open to interpretation that it's going to create less clarity than not having a regulation at all. The fact that they leave some of the interpretations to the member states means that, Slovenia and Greece might have different opinions on the same aspect of a European-wide regulation. They are suggesting things which might be enforceable and maybe even good for centralized applications, but they are totally impossible to implement in decentralized applications. So if I'm at the forefront of innovation and I want to develop a decentralized app or a decentralized finance system or a new token on DeFi or a new type of fund that is tokenized or whatever, what I would probably do is that I would do it outside the European Union. So if the European Commission goes ahead with this proposal as it is, we might see innovation leaving the European Union for other parts of the world. And this is a big geopolitical game, because we're talking about probably one of the most important technology-fueled innovations of our time. So, the internet became dominated by the US, the internet economy, because in the early days of the internet, in the early 90s, when China and Russia and the European Union were thinking that, you know, we need to protect our citizens because the internet is about, I don't know, pornography and gambling and stuff like that, the United States created a very favorable to innovation regulation on this space. And naturally, all innovation flew to the Silicon Valley and created what we saw. It's the same thing here. If the US gets a more laissez-faire approach to innovation, or China does it, or some other jurisdiction does it, or the European Union does it, it's where innovation will flow. So I think we need more regulation, but not more strict regulation. Regulation that realizes that this is a new space. It's a space where incredible things are going to happen. It's not that, you know, everyone is a fraudster, or as Christine Lagarde said recently, doing funny business using Bitcoin. On the contrary, the majority of people want to innovate, and the regulators should stop only the fraudsters and the scammers, and not stop everything in the hope that they will also stop the fraudsters. It's as if we said that, you know, if the dollar or the euro can be used for drug dealing, we will outlaw the dollar so that we don't have drug dealing on dollar. That's stupid regulation. It's not regulation at all.
Okay, thank you for your thoughts. I think we have pretty diverse opinions on this, which is really cool. While we are still talking about regulation, I think there are like two other questions that a lot of people ask. And one is related to XRP and Ripple and the recent SEC crackdown on the Ripple Labs as a company. So what are your thoughts on that? Like, do you think it's kind of the end of the Ripple, or is it going to result in a situation where there will be more regulatory clarity about the nature of the coin?
Well, for Ripple itself, it all depends on how the whole thing goes. Obviously, Ripple will fight it in courts. They have the money to get a good legal team. So we're going to see interesting arguments emerging. It all depends on what happens in the end. As I wrote in one of the answers on the chat, if Ripple loses it, I think it's going to be catastrophic for Ripple. I don't know if they're going to lose it. I don't know how it will go. It's going to be a complex case, and it will probably drag for long. But in the long run, and if you don't look at Ripple's situation, which is obviously challenging, for the whole space, it's a good thing. The more clarity I mean, at the end of the day, if you know that Ripple was an unregistered security, then you know that things like Ripple are unregistered securities. If you know that Ripple was not deemed a security, well, first of all, this will be hugely bullish for XRP, obviously, and for Ripple as a company if they win this. But it will also create a very strong precedent for other similar projects. So I think the whole crypto world will be watching this from very closely. The fact that, you know, this thing happened and Ripple, you know, took a big hit in terms of the XRP price, but not a catastrophic one. I mean, it's still trading at 20 cents. It shows that the market is probably seeing this as a case to be fought. We'll see. I'm not an expert in this thing, so I cannot, you know, give a more detailed opinion at this point. But I'm going to be watching it as many in the crypto space with interest as it unfolds.
Okay, I would just add to this question by you guys before we answer. Like, so how do you? The question still stays, but how do you also feel about having US regulators judging the cutting edge technology, like all these things that we talk about, through the Howey test that is like 60, 70 years old, And so how do you feel about that kind of approach that we currently see now in the case of Ripple as well?
Well, I'm not a huge fan of Ripple. I wouldn't invest in it myself. I think it's like whatever we want to like discern from what SEC is doing is definitely a speculative asset, however we look at it. And like using Howey test, I mean, this is how like American law operates, right? They will use the last applicable thing they used the last time the problem was solved, and until they find something better, they will keep using it. Is how precedences work. I'm not a lawyer, so I may be completely wrong here, though. I would say that if Ripple will be sued to death, and if it will be banned and delisted from all the exchanges, if if every speculator, every holder who just holds Ripple to get rich will sell it, and after all that, like Armageddon, if Ripple will somehow survive, even though it's outlawed, if somehow someone will use it somewhere, I think it will prove to be sufficiently decentralized to call itself a real cryptocurrency. So it will be a trial by fire. From what I understand, from what the claims Ripple had some years back when I last looked at it, they claim they are a currency for like fast transactions, and that should work the same whether the Ripple costs $1 or 1 cent, right? So let's say all this bad stuff happens to Ripple and Ripple will survive it, and there will be still market of people that are using it, that are, I don't know, paying with it or transacting on Ripple blockchain. I'm not even sure it's a real blockchain, but if they keep using the network, even though it's banned and it's not like traded and it's not like pumping price-wise, I would say that, yeah, that will be the point I will concede that Ripple is actually a cryptocurrency. Until then, I don't know. For everyone who invested in Ripple, it's certainly kind of bad. I kind of feel like there is a lot of schadenfreude from people who hate Ripple, from Bitcoin maximalists or some other crypto investors who didn't subscribe to Ripple's proposition, and they actually want to see it fail, and they are cheering SEC. However, if these same guys are then saying that they are anti-regulation and anti-government, I mean, they are like full of shit, right? Because then it means that they only are anti-regulation when their assets are concerned, and not when something that they don't like is concerned. So yeah, watch out for guys like these. I know a lot of them. So yeah, nothing much to add. I mean, let's see.
I would just, if you would need to guess if Ripple will exist in 10 years from now, what would you?
I would say no, with the caveat that it's super hard to kill a cryptocurrency if it's a real cryptocurrency. If it is at least a bit decentralized, you only need to find like 2 or 3 people to run the network and just send like transactions between each other, and the cryptocurrency is effectively alive. You have to only find like one shady exchange with anonymous founders who will be willing to list the asset, and it will trade there for non-zero amount, and it's not completely dead, right? Even if you kill the cryptocurrency somehow, and like 5 years later someone will fork the code and create it again, it is still kind of resurrected as a zombie, and it will kind of still live on if there are people who use it. So I would say that cryptocurrency, if it's a real cryptocurrency, if it's not a centralized database, can really die only if people completely stop caring about it on all fronts, which is super hard to do. Whether it happens to Ripple in 10 years, I don't know. I would cautiously say that it will happen to Ripple because something cooler will come. However, the sheer amount of focus and attention that Ripple captured, especially from new crypto investors, is like staggering. I have a lot of people, every bull market, every price boom, there are a lot of newcomers coming to the market. And for some reason, first asset they ask me about is Ripple, not Bitcoin, not Ether, but Ripple. I don't know if it's because Ripple did such a great marketing with being a bank-friendly coin or whatever, or is it just because the price of one Ripple unit is really low and they see it like going through Bitcoin level. I have no idea why why people are so obsessed with it, especially the newcomers. But there is a lot of attention on Ripple. It's still on the spotlight, so it's hard to kind of kill it in a way that all the people on the planet would stop caring about it. It can happen in 10 years though. 10 years is a long time, and attention span of crypto speculators is not that long. So I would say that in 10 years it will most likely fail, or it will be dead. But you know, there is this caveat that it only needs a little to kind of stay alive.
Okay, maybe Tomasz, you can just briefly say, what do you think if Ripple will exist in 10 years from now?
I don't know really. For me, I'm ignoring Ripple. I would advise anyone who is listening to do the same. It's full of shit. Scientists are doing jokes at the conferences about their consensus protocol. It's not even a real consensus protocol. There are spontaneous forks possible. Then you have all other kinds of problems with it. I don't see a reason why anyone would buy it. But the thing about Ripple is they've managed to survive until now, which also is a bit surprising for me. But whatever this secret sauce is, it may, maybe with some possible decline, but it may keep their running for another 10 years. I don't know. This world is crazy and full of illogical movements. So I don't really know here. What I know is the protocol is broken. That's not that hard to prove. Okay,
so we have probably like 20 minutes to go. So I want to still like try to answer as many questions from people as possible. We have some questions also, like, this will be probably just a question for each particular one of you. To Professor Giaglis, you also focused during your research on DAOs and decentralized autonomous organizations. Can you tell us, like, what's your view? Like, is this the future in some way, or like in which areas are DAOs actually the future, where we will see some like real live applications, maybe apart from DeFi, where we see them being deployed now?
Okay, well, thanks for the question. I think we're getting to the essence of what the next 10 years will look like. As I was writing to one of the people in the chat, predictions are always difficult, especially about the future. So I don't know what the future is, but I can definitely tell you my thesis and my vision on the directions of it. So what we are undoubtedly seeing at the moment is a new tidal wave of decentralization. So we're going to see huge moves towards decentralization in many domains. We started with decentralizing money, so decentralized means of payment and value exchange. We have moved in the next natural step, which is decentralizing the financial infrastructure, what is happening now with DeFi and exchanges and lending and borrowing, liquidity provision, automated market making, and stuff like that. And I think this is a hugely important area for the future, and we're going to see incredible innovation coming up in the next years. I think that DeFi is where Bitcoin was in 2013, so we're going to see lots of waves. Again, this is not investment advice. As Matej said earlier, we're going to see lots of boom and bust cycles in this space. So I'm advocating for the space itself, not for any of the existing projects necessarily. So DeFi is one big thing. And I think that the next, if we are looking at the frontier opportunities, so the next wave of applications, it is natural to expect that after decentralized finance, we're going to see a wave towards decentralized forms of organization. And I mean, spontaneous arrangements where smart contracts are used as a basis of creating the equivalent of the firm or the corporation of the industrial age. And in that respect, I do think that DAOs represent a very promising opportunity. There's lots of things to be resolved, but when they are resolved, if we are if we are able to fantasize a world of decentralized organizations, then it is not a big step to also imagine a world in which blockchain is going to converge with other technologies, namely artificial intelligence and the Internet of Things, to create the new technology stack of the future, a stack in which commercial activities are not going to be carried out only by people, but also by machines and by code. So we're gonna have objects having intelligence embedded in them, communicating with each other over an IoT infrastructure, and using blockchain as the layer of negotiating, transacting, signing contracts with each other, and paying each other. So I see a world, an emerging world of machine-to-machine commerce in the future, and I think DAOs are going to play a very important role in that. So that's one bucket. The second bucket that I see and is, I think, quite interesting for the future is the movement towards tokenization. There has been lots of discussion, not so much success at the moment, at least in the commercial viewpoint of the world, in tokenizing real-world assets. And people have been discussing, real estate tokenization or digital art tokenization, you name it. I think we haven't seen anything yet. We're going to see huge developments in this space. We're going to tokenize things and create liquid markets for things that we haven't ever been able to create markets from up to now. Like, for example, tokenizing our time, tokenizing our future incomes. And I see early attempts and new projects that are going to become hugely important in the near future. So if I wanted to summarize what I see as future directions in crypto, it would definitely be DeFi, next generation DeFi. It will be DAOs, decentralized organizations, and machine-to-machine commerce, and it will be new waves of tokenization.
Okay, thank you. We have lots of questions related to quantum computers. Tomasz, do you think that the future of cryptocurrencies can be endangered by the emergence of quantum computers?
I don't really think so. I know that quantum computers can theoretically break some of the existing crypto primitives, but we know already a lot of crypto-resistant stuff which we can use. It's if some new project is not using quantum-resistant signature scheme, for example, it's probably just because the old one, the current one, they are a little bit faster and more memory efficient. And the threat from quantum computers is not that emerging right now, but there is no problem using that stuff. And this is, as for the signatures, you can use this. And then there is another problem, and that's secret communication, like secret end-to-end communication. And this is in danger when quantum computer thing will come, because we don't have any real answer to this. But this doesn't affect only crypto. This affects the whole communication. It affects crypto in the same way as it affects your communication with your normal fiat bank. So this needs to be solved somehow, and I'm not sure how will the solution look like, but it will apply the same for crypto as for any other aspect of our lives. So there are two things to wrap it up. There is secret communication, which we need to solve somehow, and the solution will apply for crypto as well. And then there is cryptographic signature, and signature we already have, which is quantum resistant, and it's enough to just use it.
Okay. Great. I have another question for you, Tomasz. So you mentioned that you don't like Bitcoin that much. You don't like the technology behind it that much. You don't like Ripple. So which are the technologies in the crypto space that you like and that you think from the software, development point of view are nice technologies?
I'm a bit hater. I don't like many projects actually, but I like certain aspects of projects. Yeah, so I like proof of stake generally in its various forms. I believe it has many benefits to proof of work, and I don't think we've seen. I would like to see some proper scaling solution. None of this. I know we disagree about Polkadot with Matej, but I don't think the Polkadot scaling really works. I haven't seen a proper proof of concept. I don't believe that much in Ethereum as well, and I haven't seen a proper solution here. For me, the best job here on the field did Solana. Solana didn't do scaling, like real proper scaling with sharding or some proper parallelism. All they did is they created like really powerful node backed by some strong GPUs. Yeah, so it's like old school concepts on steroids. It's not anything new. So for this reason, I like they decided to do it differently than most of the
aren't you afraid
kids,
that this could be like too centralized and it will not prove to be resistant enough against the regulators and all kinds of other powers?
Well, no, you can have as many validators as you want. It's just they are not processing the transactions in parallel as, for example, Ethereum Dreams, they have multiple shards. It's all doing sequentially. It's just really fast. But those validators, I don't want to shill Solana much. I don't know that much about the coin, actually. It's just this I know. They are doing the stuff sequentially, just really fast, using GPUs and fine-tuning the node to the very best possible outcome.
Okay, thank you. Matej, what is, from your point of view as an investor, what is the future in crypto when it comes to investing? Where do you see now the greatest opportunities? Where do you see the maybe new emerging business models that will accrue value in the future when it comes to crypto?
Yeah, we should have a separate webinar on that because it's like for 2 hours or so. But yeah, DeFi is definitely like it's obvious right now. It's like everybody right now sees the potential, and it's not too hard to see where it can go with proper scaling. Well, when I'm looking at crypto now, I try to kind of discern where the value will accrue from the like on which part of the stack will it accrue, because there are like layers. Or when we look at something like Ethereum or Solana, there is this like base layer of smart contracts and like this base blockchain that powers everything, and it has a token, right? It has ETH or SOL, the asset. And there are validators that are validating the network, and they are accruing some fees from transactions, right? And you can invest in that, and it's maybe a bit similar to investing in like internet infrastructure companies early on. Then you have this middleware stack, like all the infrastructure, things like oracles, things like developer experience, like layers like the graph, which kind of standardizes the data from smart contracts and lets others develop on smart contracts much more easily because the data are standardized. And then you have the, let's say, user-facing layer where you have the apps that users integrate with, and it can be a decentralized exchange itself with some good user interface, or it can be an aggregator. It can even be a centralized company that manages everything for users, and users don't even interact directly with smart contracts. And like the traditional tech VCs, they are usually like investing most in user-facing apps. When we see how internet developed, the most value was accrued to applications or like businesses that were user-facing, like Amazon, Facebook, Google, Apple. They all created basically a ways for end users to
Okay, I think Matej is out for a second. Okay, so let's give him 5 seconds if he can come back. And if not, we can move to another question. Okay. Okay, cool. So we give him time to get back, even though we are actually running out of time pretty much soon. But we will get to Matej's answer perhaps in a bit. But Professor Georgoulis, you mentioned already challenges related to offering cryptocurrency focused educational programs at the University of Nicosia. And since the university is at the forefront of this educational space in crypto, like where do you see the future, maybe even literally from the perspective of the University of Nicosia, like how are you gonna, what do you think you will have to include into the curriculum? What kind of aspects, what kind of technologies will be necessary to be, to study in the next few years when it comes to crypto?
Well, certainly token economics. We are actually redesigning the curriculum, and we're going to have a wholly fresh, a new MSc. We have already submitted it for approval from our accreditation body, and we're expecting the approval anytime now. So we're going to have a whole set of new courses to introduce new stuff. One of them will be token economics, and I need to say at this point, in the previous reply, I forgot to mention one thing, and then I saw it in the questions in the chat, and I answered to one of the participants. I forgot to mention NFTs, so non-fungible tokens. I believe they're going to be another interesting development of the next few years, and I'm looking at the tokens in this space very closely. So anything that has to do with tokenization, we're looking at it. Anything that has to do with the convergence of blockchain with other technologies, interestingly, we are like creating a new internet. And as with the internet as we know it, in the early days, the discussion was about TCP/IP and SSL, and whether and HTML, and whether things were secure and whether things were scalable. I think in a few years' time we will have gone beyond that discussion. The major blockchain-based platforms and projects would have proven their sustainability, security, scalability, and robustness in general. Otherwise, we will not be in this space. So the discussion is going to move more to applications, to the applications layer, and the applications layer will necessitate that blockchain is not alone, is combined with other exponential technologies like the ones I mentioned. So the other thing that we're introducing in the curriculum is a wider picture where we look at blockchain not as an isolated incident, but as an isolated technology, but as part of a suite of technologies that are going to dominate the agenda of application development in the future.
Okay, great. That sounds really great. Perhaps the last question, since we are almost at the end. Tomasz, from your point of view as a CTO of a software development company, or maybe what would be your advice to people who want to start to, coding and programming, and they want to get into crypto? Like, what would we recommend as technologies, languages, frameworks, even blockchains to look at and start with from your point of view? I'm not sure if Tomasz is out.
Yeah, I'm
Okay.
here. I'm sorry. It's a really tough one. I don't want to be. Maybe if you can throw in some another question for someone else, I'll have this some proper thinking. I don't want to be. I don't want to take this too lightly.
I know, Professor, would you want to answer this question too?
Sorry, again, I was writing, so can you repeat the question?
Yeah. So what if we have an audience, hundreds of people, so if some of them want to maybe start to really get into this technology and start to educate themselves, maybe not necessarily now going through the Master of Science degree, but just to really get educated on themselves, like what are the resources, what are the languages, what are the technologies they should look at?
Well, there's a huge wealth of material on the web, but I think the best and thing that they could do is take our MOOC. It's free. It's taught by Andreas Antonopoulos, who doesn't need an introduction. We got Antonis Polemitis, who is one of the crypto OGs and the CEO of the University of Nicosia, and myself. So this is a 12-week course. It's online. It's just 1 hour a week of live session with Andreas, Antonis, or myself, and then lots of material. You don't need to enroll for the MSc if you don't want to do that. But the next MOOC is starting like in 10 days, so 1st of February. So I don't know if Hazal has shared the link. Yeah, I see it shared by Dimitris now on the chat. So just register for the free MOOC and you'll be up and running with the basic info you need on everything related to crypto, but also to blockchain, because we've discussed crypto in this webinar, but there's also blockchain applications, non-financial, non-crypto asset related stuff that they will have their own applications in this space. So I would encourage everyone to go and see our MOOC. And for those that are interested in our other products, so MSc or related, we have a special offer for the people that are registered in this webinar. So David, I think you've got some information about that you will share in the end. So
yes, I will share I will share the QR code at the end of this session, probably after the Tomasz last answer.
Sure. So several things to note here. First, in our organization, what I see is the best blockchain engineers we have are the people who were our best engineers before the advent of crypto, and they just thought some crypto stuff on top of that. Yeah. So if you want to be a great engineer, you can start being like generalist, good engineer, and then just have some crypto specification on top of that. I believe it's probably the best way how to do it, because crypto development is not that different from standard software development. If you already consider yourself pretty skilled in the standard software development, well, you can try to build some DApp, for example. It's not that complicated. Or what we do, we started our crypto projects with ADA Lite, which is basically the lightweight wallet for ADA, which is the currency of Cardano. It was the first lightweight wallet at the time, and I proudly say it was the most secure at the time of it as its advent. And yeah, we had to learn a lot of stuff about cryptographically signing stuff, about how things are organized on the blockchain, stuff like that. So it was a really good and intense course. And as I mentioned before, there was no proper specification at the time of nothing within Cardano. So we had to study the Haskell code for the node, which also taught us a lot about how things are working there. It was really not that pleasant because we were literally thrown in the deep water. But after a few months, we managed to do that, and it was probably the best in it was the biggest, the greatest education we could get at the time, probably.
Okay, thanks a lot. It seems that Maciej will not be able to join us back.
I'm actually back.
Oh, you're actually back. Cool.
Yeah.
So I haven't seen that. So perhaps you can just have this opportunity to conclude our session with what you were talking before, like just very briefly, I assume.
Yeah. Okay, I will just
Yeah.
I will just do like a short version. So when you look at like where the most value is captured on the internet is the user-facing layers or the websites, like big websites like Google, Facebook, social media, and e-commerce sites. It's not actually like internet companies down the stack. And there is this like unimaginative, very straightforward thesis that crypto will be the same. That there will be a couple of big companies or DeFi aggregators or crypto service aggregators and providers that will capture all the end users and all the money will flow through them, and they will then just decide which DeFi protocol or which smart contract to use. And the whole all the power and all the value will be captured by them, which is, I mean, it can happen, but it's pretty, I think, unimaginative, and it's like repeating what happened in the past, and usually the past kind of rhymes but never repeats. So I would say it will be much more complicated than this. I think the value will be captured much more evenly among different layers in crypto technology stack than it is on internet technology stack. And we right now, apart from DeFi, we have this, we call it like middleware thesis, that before we can really hit like mainstream adoption and capture end users, we need to create proper tooling and proper developer experience for those who want to build cool stuff on top of like crypto based layers. So we are investing in this direction as well. Other than that, I said it before, I may repeat it. I really love Solana though. It's a very cool scaling layer. I mean, it's one of the most interesting technologies and most interesting white papers I read in 2018. However, I don't subscribe to the thesis that there will be only like one dominant smart contract platform that every other project will build on top of. Just because there are different use cases that need different parameters, and if you build something which is very intensive on, I don't know, front running like decentralized exchange, and you build it on top of Ethereum, you are sharing the block space with all the other applications there, and you need to kind of share the fees as well, and it can get clogged pretty fast. Solana is much better in a way that it's much more scalable, but it has these same issues. Like if you build a lot of things on top of Solana, at one point it will hit its scalability limit and it will need to shard somehow, or do other Solanas that will serve other use cases. And there are two things, two ecosystems in crypto that are doing it differently right now. One is Polkadot, the other is Cosmos. And what these two allow you to do with some minor differences is that you can create your own blockchain with your own validator set. So, your own stakers that will stake and run the network. And the blockchain itself can be optimized for your own use case. Like there is one project on Cosmos ecosystem, which is called Torchain, which is a decentralized exchange that is optimized just for that one use case, and it doesn't need to compete with other use cases that are built on a smart contract platform, because it itself is its own smart contract platform. So it kind of reduces the technology stack by one layer. And then you have so-called IDC, inter-blockchain communication protocol, which helps all these independent blockchains which have their own validators, their own tokens, their own sovereignty. It helps them to communicate together and kind of pass assets and transactions between each other. So I think this kind of multi-chain future is the more probable one, and it is actually even better than everything being built on top of one thing, because then you have this architectural centralization. When everything is built on top of one layer or one smart contract platform, you still have even though this smart contract platform can have like hundreds of validators, it still is subject to one governance, to one direction that all these validators need to agree upon, and not everyone is going to agree with that. So for this reason, I think, despite the network effect being a big thing in like technology, I still think there will be more than one dominant players in the ecosystem on all levels of the stack, be it user-facing apps or like lower layers of the tech. And yeah, this is how we are thinking about the ecosystem. We are not trying to pick the only one winner and focus only on that, but we are thinking probabilistically and try to spread our bets to capture this thesis.
Okay, thank you, Maciej. So I would still probably give a chance the other two guests to maybe either react or just put some concluding remarks, if you want to, guys.
Well,
if not,
on my side, I don't have anything else to add. I just want to thank both you, David, and of course Thomas and Matej, but mostly the hundreds of people we had. I mean, I've attended many and spoken at many webinars, but this has been really the most interactive, and I've seen the chat and I've tried to answer some questions that I could while answering the questions, and I really enjoyed the whole experience. So thank you everyone for being here.
thank you as well. Okay, guys. Tomasz, you want to add something?
No, probably not anything more technical. Thank you all for this wonderful meeting.
Okay, guys. Thank you really
To the moon.
Thank you very much. I just like show for those people who are interested last time the slide where you can scan the QR code to get redirected to to Hazal, so you can get more information on all these things that we mentioned. Thank you everybody for really great discussion. Thank you all people in the audience who've been sending lots of questions. I hope we made many of you happy through answering at least quite a majority of them, and I know we didn't get to all of them, but hopefully next time. Cool. So I think that was all from our side, and I really hope to see you all guys into perhaps next webinars. Take care.
And see you in our MOOC on February 1st.
Yeah. Definitely. I definitely recommend to everybody to join it. I've taken it multiple times. I think first time in 2015, then 2017, and it was always a really great joy to do that. So definitely everyone should try it.
Thank
Cool.
you.
Thank you very much, everyone. Bye-bye.
Bye-bye.
Nice evening. Bye.
Bye-bye. Take care.